Ben here from East West. Thank you for joining me once again this week as we take a look across the nuclear and uranium space. We've got a fair bit going on next week, don't we? We've got a slew of big earnings out rolling into non-farm payrolls, and then we've got the popularity contest beginning to come to its conclusion. So there's plenty going on in the next few weeks. Of course, we've had our consolidation begin now. So let's just cast our eye across the space and see what we can see. Okay, we're just going to start off here looking at Constellation Energy. So, you know, we've just consolidated now, right? We're in this sort of wedging little pattern that we just wait for this to break out one way or the other, of course, either up or down. There are some fair value gaps in this market, okay? So when you even just look at this bar, this particular bar here, this basically was a fair value gap. Reason being that when you look at the volume that transacted through here, there was hardly anything. It's just gapped open, no sellers, and gone straight up to consolidate at the top of the bar, which would probably tie into this little wick down here. But you know, through this whole section, we've got very little market acceptance. There's been, I mean, obviously there is a gap there, but there's no work done through here. So, you know, there remains the possibility that we will correct down like this, but, you know, we've just got to wait to see how this little bit of churning here plays out. We can see that the volume has now tailed away, which is not really unexpected, to be honest. I mean, now that we're going sideways, a few people who enjoyed this rally might have decided to take their chips off the table, and obviously there'd be a bunch of people who are getting in and a bunch of people who are holding. So we will see how this resolves, but we just don't have anything definitive going on here just yet. I mean, you can just, and that's telling you with the RSI trailing off is the balance of power between the up candles and the down candles. Or put it this way, the power of the up candles is losing its dominance. That's all that's really telling you. Okay, so that doesn't mean it's necessarily going to crash. It's just telling you it's out of momentum, which is very apparent on the chart. Now, this isn't necessarily a bad thing, because the way I view this is what this consolidation has allowed to happen is that the two lines, the Tenkan-sen and the Kaizen-sen, are catching up to each other. So that just means that price and time are becoming balanced. Okay, so what it means is that enough time has gone by for this move to be digested. Okay, so there's a couple of things happening here. So we've now got the Chiku span, the lag span, starting to get tied up in the candle. So I would like to see this hold, but there's a chance that this is going to get entangled up here, which is kind of just means that the market's not gone anywhere, right? The price structure's sort of held. So we wait and see. But of course, I think the other thing we've got to keep aware of here is the earnings report coming up. So the earnings report is expected to be quite strong at 2.63 a share. So when you go back and look at the history of the earnings very quickly, this could be tied in, but quarter three earnings beat expectations very, very heavily. And it looks like for quarter four, they're expecting another good result. So could be a catalyst there for a move one way or the other. But I suppose you could make the argument that perhaps we are going to just sort of track sideways. And this wedge is not very concrete. It's you'd want to see a little bit more, and it's not very symmetrical, which it doesn't really matter. But we just might not see, rather than a wedge, we might just end up with a bit of a more of a sort of traditional sort of trading range like this till we get to those earnings and the market resolves one way or the other. So if it was bad, I'd be thinking about these gaps getting filled in here to the retracement zone, and if it was good, well, we'll have to wait and see. But obviously, it's not going to take a lot of good news to make this thing go further, I would think. Just quickly here looking at OKLO. Sorry, just put the watermark on there so it's a bit easier to know what I'm talking about. So yeah, look, this one has just come back into start to tag the moving average riders here. So we've just reached into the first cloud, if you will. So just to represent that slightly differently, this red line, and this is more like my man the Red Devil does it. The red line represents the 5-period EMA on a daily, okay, and then this orange line would represent the 12-period EMA, and then down below here we've got the 26 and the 50 period EMA. Okay, so I just do it cloud-wise because it just looks a little bit more clear to me. So we're just right. You can just see here as we've gone up, we've just ridden this. So we just this is good. This is really what you want to see. Okay, now ideally you just want to see this go sideways. Digest this rally without losing too much of its price before moving on. Okay, so that would be the ideal scenario, but we just don't know if that's going to happen. Very strong. We don't have any divergence here, so divergence isn't the be all and end all, of course. But what I'd just be concerned of is if we get another rip up like that, and the RSI just made a lower high, and we started to diverge. I would then be going, oh, okay, well, maybe just got to be a little bit careful here. Okay, so if you saw that sort of thing, it'd just be like, oh, okay, well, we've got divergence, so do I need to be careful here? But for right now, it all looks pretty good, right? We're just holding that EMA for now, and we're digesting the move. So there's nothing really untoward that I can see. You've got a bit of a double bottom here. So what's this? Just $17.60, which I'd probably pay attention to. If we lose that, then maybe you could go back and say, okay, well, let's just come in here on a shorter term. Maybe what's that? Yeah, so $17.65. If we lose that, then we're going to get some sort of three-wave correction, which might come back and test that. Now, it's kind of interesting, right? Because we're just looking at it on a 4-hour, but if you look at the bottom of this wick, it's lining up exactly with where the 50 would be when you talk about the bottom of the run to the top of the run. So, and that would just be caught then. Well, these are 4-hour clouds now, of course, but, that could provide an interesting point for OKLO. But I mean, that's going to be a deep push back down to $14.17. That's not going to feel super good if you're sort of long here up in the high teens. Okay, but that's a possibility that you probably should prepare yourself for. So just move over to the miners now. And we're just looking at CCJ here. This is kind of where we left off, right? So I sort of noted that this was a high watermark for the RSI. Like we got pretty good up here. We just had a little bit of a correction, but certainly we were sitting at maximum momentum in terms of the power of the up candles against the down candles, and of course up here we've just started to run out of gas. So this kind of now looks like our 5-wave move complete. Now we did have the little gap here that we haven't filled in. But the question mark was going to be whether or not we corrected down, maybe to just test 38 down to this structure if we came down a little bit lower. So time will tell, but just talking to UC, we were talking about, it's kind of interesting. Look at the price to earnings ratio, 126. Like, that is really, really high. So we do the same thing, right? We've got earnings coming up pretty soon for CCJ, and they're going to have to be pretty stellar to maintain up here, I would have thought, which isn't to say that they won't. They certainly not impossible. We've seen what this market can do, right? And we've just poked through the all-time high. But you would think that this earnings per share, that the price to earnings ratio is going to have to, the results are going to have to be pretty good to justify the current pricing. But that's not to say that this earnings, this sort of thing is priced off what's expected in the future. But I think the point being is it has the potential to cause that little wobble. Okay, so we wait and see. But we just look at these factors and think, okay, well, if it wobbles, what can I expect? And this is just what I'd be looking at. All right, so I'll leave these gaps here, but they look very unlikely to be filled at this stage. Okay, but I think this one looks pretty good. But so far, you can see what the market's done this week, right? It's really respected that low, and it's shied away from this gap. So it's actually holding its support for the time being. So just for now, this is kind of good that we've just come back a little bit here now, because you can see the Kijans and the Tenkan are starting to catch up to each other. So that just means that we're coming back into balance between price and time when we talk about this rally. Because you can see here that the Kijans and the slower moving line has been a long way away from the Tenkan. It doesn't like that. They like to be together. Okay, so to give the market balance between price and time. So what it just means is that enough time has gone by now to balance the movement in price. That's what it means when these come together. But right now we're all in a bullish posture. This all looks pretty good. Now we have just come down. We've just broken through the top of the bottom of those short-term moving average clouds. So maybe we come back down here, and this is what I was talking about. Maybe the pushback down in CCJ, because the market is very, very strong, and it's very interesting to see how this all lines up now. So you've got this structure right on that psychological $50 mark. Okay, so maybe this 38 is the point of call. Okay, and that's all we're going to get in terms of a pullback. That would certainly be my first point of call. But you can see here how you've got these bottoms here. If we did manage to penetrate that, maybe this is where we're headed to. I would suggest that if we get down here, that what it's going to do then is probably bring in the 50 and the 200-day simple moving averages, which could also come into lend support. So the white line is the 50, the blue line is the 200. So and this is just a potential plan if we slip down, how various factors are going to come together there. So we would actually lose our short-term moving average clouds, but we've got a few points that would suggest that down here, sort of mid $47 area, would be a good value spot. But, prepare for the worst but expect the best. So, preparing for this is the worst but expect the best, which would be kind of that sort of thing, I would imagine, at this point in time. Now, I wouldn't have said we've diverged here particularly. So, yeah, there could be a bit more of a kick in this. But we'll have to wait and see what these earnings do. I think that'll be just our next point of call. And then, of course, the market's got a little bit to digest in the next few weeks. I don't know if you've noticed, but there seems to be some sort of popularity contest going on in the States, which may not be uranium specific, but I think will be market moving as well. And we've got a slew of big earnings out next week on top of non-farm payroll, so you've got to throw that into the mix. So there's certainly a lot going on, but we just wait and see how this price develops. But right now, all you can say is we've got this correction. We've got a little bit of a bottom being respected here in a few wicks, and this gap is yet to be filled. This is just acting as support for the time being. Just moving over to next gen, this is just doing it's almost like a carbon copy of CCJ, right? I can see here the National Bank of Canada expects Cameco, Denison, Next Gen to benefit, and then we've got National Bank has raised the Canadian dollar price target to $13 from $11. So I might just switch the chart to the CAD. So broker hindsight, I mean, they're already raising their price target as it's already been through there, right? So $13 Canadian, we're in the Canadian dollar chart here, right? So that would be up there. So that's sort of, I'm back in the US dollar chart here. That seems like a little bit of fluff to me. I think the main thing is here, right? We haven't made the new all-time high, back to the all-time highs, which is, well, what a lot of the other stocks have done. Well, if not all-time highs, certainly those recent big peaks. Before we've consolidated, we've begun this consolidation, and as the Red Devil pointed out, this started to go through its daily consolidation a few days before the rest of them did. It sort of did lead the complex down a little bit. So same thing, we've just had 3 days now where we've resisted this little gap. Okay, it's acting as support, which is kind of nice for the market. And this is kind of lining up with the theme across the space that maybe just this 38 is going to be it. But of course, the move down to the 50 can't be discounted entirely, of course. But once again, this one's got quite a high price to earnings ratio. Okay, so we do have earnings coming out here as well. So this could be the bellwether. So I think this one's going to be kind of interesting to watch, because if it comes out, it's going to come out before everything else. So, if this really takes a turn, well, I think then you've got to look at your others and think, okay, well, what do I want to do with them? How does my plan sit? Do I need to revise my plans, go over them? What am I going to do? Am I going to buy more, sell out? Whatever you're going to do. But right now, this looks okay. So look, maybe we just sort of get this move to here, and that's it. Maybe the earnings are quite good, and we move up. But it doesn't look like the expectation for the earnings. It's actually, they're expecting a little bit less here. So we wait and see. But once again, look at this, right? So this is sort of quarter four for 2023. This was a good one. Quarter three for 2023. A little bit softer. So I don't know if you can read too much into this, because the world's changed. So here we are here, right? We'll see how it comes out. So I thought I might just finish off here with something a bit different and do one of the juniors. So we're just going to do UROY here. So this one's got a little bit of a different look from what we have been seeing. Okay, so this sort of rally looks like it's not. This consolidation to me, it's just to the naked eye, it almost looks like. Have we got 5 waves up there? Hard to say, right? There's no real divergence going on here. Like the peak of the RSI was the peak of the price, and usually it's not written in stone. It's not the Bible. It's, you know, usually what you would want to see is just that higher price with that lower RSI to make you think, okay, this run is completed, and now I'm just going to look for this before expecting more. Okay, that would just be how you'd go about looking at it. So just looking at this and the way it's moved up here, it hasn't been too bad because it wasn't too steep. It wasn't ridiculously steep like some of the other ones. It's just ground its way higher. We had the doji outside the Kelton channels up here, which you know, was a harboring of just the short-term top, and we've since began the correction, which is not a bad thing. And, you know, to me, just looking at this, thinking, well, you know, that wouldn't be a bad thing at this point in time. But that, you know, it's not to say it doesn't push one more time before it has a deeper correction. But, you know, just coming back in to test this, just to test the buyer's resolve and kicking on a bit further, that's just what I would like to see the market do. But for now, of course, we're just riding this 12 period EMA. This has been what's been holding the market this week. So just looks like the main point of call is the underside of this little cloud. You can see we rode it quite nicely here. It's held. We had a little dip below here, but it's not been a bad gauge of what's going on. Okay, we maintain above the 200-day moving average. So what would be nice, and what should happen in the next week or two, of course, is you'll get the golden cross. So the 50 period SMA is going to move above the 200, okay, which just reflects, you know, what's been going on lately. So, you know, this all still looks pretty good. I think it's just a matter of deciding what you want to do in terms of if you've got a position or you want a position in terms of building a position. So, you know, I think the Red Devil made a really good point recently when he was talking about pyramiding. And that is, of course, as we sit here, if you want to build a position, just say you're coming into this fresh and this is a company that you wanted to buy. If you wanted to build a position, keep your position size and your entry size smaller at the top. As it moves down a little bit further to some of these more areas, you can build bigger positions. Okay, you can buy more. That way, you're sort of building a position slowly with more ammo, because the worst thing you can do, it's not the worst thing you can do, but the scenario that you got to be aware of is that you fire your full clip in here, and then all of a sudden the market's dropped down here, and you're like, oh well, you know, gee whiz, I'm down a little bit, or you know, and it's up to you, of course. I mean, it's up to each individual how they do it, but you might leave the same number of sizes, so you might buy 25%, 25%, 25%. You know, at 4 different levels, and you know the market moves straight through you. If you slowly buy in, you know, the pyramid style, right? So just increasing your positions, your entry size, more and more as the market moves down. Now, of course, if the market's down here, maybe you've got a problem. But if the market is moving down on you like that, you know, you've still got fresh ammo. You haven't, because before you go in, you got to think, okay, well, how much am I going to spend on this thing? Am I going to spend $1,000? Am I going to spend $10,000? But if there's a limit to how much you're going to put in, you know, if you're going to buy $1,000, well, maybe here you just want to buy, you know, $100 worth of shares. Okay, and if it moves down a little bit further, okay, well, this time I'm going to buy $250 worth of shares. You know, so whichever way you want to do it. I mean, that's just a way to do it, but it's not a bad point to make. Okay, if you're going to pyramid in, start small, and as the pyramid gets, you know, and then the base gets wider and wider, you can buy more. Okay, so your average is going to be much better than if you bought in entirely here, or if you left fixed sizes on the way down. So that's an interesting little point there from the Red Devil. I thank him for those insights. So look, that's it for this week. Thank you very much for watching. I think next week I'll try to do a few other things. I'm going to try and get some more guests in, and I'm also thinking about doing a deeper dive, a little bit of an expose on the Aussie uranium stocks with someone who may know a little bit more about the space than me. So if you think any of that's a good idea, let me know in the comments. Thank you very much for watching once again, and I will see you next time. Take care. Bye for now.